I do think we'll take out the 73,000 high before the end of this year and probably finish 100 somewhere in that zone. But a year forward from that, if I look at the market cap of gold, right, and Bitcoin at 70 is about 1.4 trillion and gold is probably 13 or 14 trillion right now.
Or actually 15.
15 trillion. And so we're 1/10 of gold. As baby boomers die and that money comes down to Gen Z and millennials, they're going to like crypto a lot more. So Michael Saylor's never selling his Bitcoin, which is very different than most assets, right? These guys think of their net worth and how many coins they own, not how many dollars they have. Now, that's not everybody, but that's a big core. And so you don't see a lot of turnover.
Welcome back to our channel. Mike Novogratz opens with a bold prediction. Bitcoin will surpass its previous high of $73,000 by the end of this year, potentially reaching around $100,000. This prediction hinges on several key factors, including the historical comparison with gold. Currently, Bitcoin's market cap at $70,000 would be approximately $1.4 trillion, while gold's market cap stands at around $15 trillion. Novogratz suggests that as generational wealth shifts from baby boomers to Gen Z and millennials, who have a stronger affinity for digital assets, Bitcoin could capture a larger share of the market. He speculates that Bitcoin could reach 25% of gold's market cap within the next 2 years and possibly achieve parity in about 10 years. This optimistic outlook is grounded in the belief that the trend towards digital assets is not fleeting, but rather a fundamental shift in financial markets.
You know, price predictions are hard when you take out old highs. And so I do think we'll take out the 73,000 high before the end of this year and probably finish 100 somewhere in that zone. But a year forward from that, if I look at the market cap of gold, right, and Bitcoin at 70 is about 1.4 trillion and gold is probably 13 or 14 trillion right now.
Or actually 15.
15 trillion. And so we're 1/10 of gold. As baby boomers die and that money comes down to Gen Z and millennials, they're going to like crypto a lot more, right? One thing you notice is the people that hate crypto usually have a lot of gray hair. And so, could we be 25% of gold in 2 years? Maybe. That's a lot, but maybe. But I would bet you in 10 years, we're 100% of gold, or 15 years, right? This trend isn't going away. We kind of had a perfect storm of, there was terror because of a lot of bad behavior in 2021, right? Froth and then bad behavior, plus the Fed raising rates. And so we would have gone down anyways without Sam Bankman-Fried and Do Kwon and all the other, BlockFi and Celsius and all the other problems, just because of the Fed raising rates. So we were starting from a distressed position, and then we got the ETF approval, and it can't be understated how important that Larry Fink, the single largest wealth manager in the world in history, who had been negative 5-6 years earlier, got orange pilled and said, actually, I see what these other people are seeing, and I think this is an asset that should be in lots of portfolios. And so while there are 11 ETFs, it was really Larry that made it easy for all of you guys to put some Bitcoin institutional investors in your portfolio. And that process has started, and that adoption process goes slowly. At the same time, we had the halving, which is another, the inflation rate gets cut in half. So imagine you had an asset and you say, guys, guess what? We just cut the inflation rate in half. And but the inflation in your other asset, if it's dollars or euros or yen, that's pretty high and it's growing, right? So you've got a deflationary asset versus inflationary world. And so we had a nice run, and prices are always set on the margin. There aren't that many sellers of Bitcoin. So many people who own it, who bought it, they believe in it almost religiously. So Michael Saylor's never selling his Bitcoin, which is very different than most assets, right? These guys think of their net worth and how many coins they own, not how many dollars they have. Now, that's not everybody, but that's a big core. And so you don't see a lot of turnover. And so listen, we're consolidating here. We'll see what the Fed does. If the Fed starts pushing rates down, you're going to see crypto go higher. It might grind higher anyways, just with the belief that gold, silver, we're starting to lose faith that this stewardship that we have in the U.S. economy and the global economy is going to be good. And that's what the prices of precious are telling you. And it's why I was talking about gold and silver for hard assets to thrive. And Bitcoin is a digital hard asset that is beloved by hundreds of millions of people right now. What we're seeing in D.C. right now, last week, was the Democrats finally waking up a little bit. I mean, I've been down there so much, and I am more of a Democrat than a Republican, but these days I'm pivoting more to becoming a radical centrist. Because of Elizabeth Warren and the power she's had around the financial decisions in D.C. in the Biden administration, it was like Democrats don't like crypto. And I said loudly and publicly, I was like, guys, there are 65 million dog owners in America. There are 85 million crypto owners. And right now, the Democratic Party risks being the party that doesn't like dogs. We hate dogs. I was like, you can't just hate crypto. And, on the same day that Biden threatened to veto this arcane accounting rule, Trump came out and said, I'm your crypto president. And it has almost become a purity test now in the crypto community. Republicans like crypto, Democrats don't. And if you don't vote for Trump, you're not a crypto person. And so the Democrats last week, for the first time, we had a bipartisan vote where 10 senators crossed the line, and I forgot what it was, 20 congressmen.
20 congressmen.
And so...
Will President Biden veto this?
President Biden will probably still veto this bill. We'll see. I hope he doesn't. I think it would be really foolish if he does. But, the way politics works is they say, if I don't veto it, I'm going to make those congressmen and senators that we told to vote no look stupid. And those are my base. And so it's like, oh, come on, what's the right thing to do? For God's sakes. It's just not the way DC functions. And so we'll see. We'll see. There's going to be a lot of lobbying. There's another bill on stablecoins coming up. There's another bill on market structure. Hear me loud and clear. Crypto needs both Democrats and Republicans to understand it and to push it forward, right? It can't be a technology of one party. It will stink for the crypto industry because these elections are going to go back and forth for a long time. And crypto at its core, any technology should be mostly bipartisan. Right? Crypto has a little for both. It's got the libertarian streak of Bitcoin, but it's also got the progressive streak of cutting out the middleman, of cutting out banks, of cutting out music publishers, of cutting out all kinds of rent takers. And so why Elizabeth Warren decided she hated it is a mystery to me, but we've got to move beyond that chapter.
Reiterating his belief in Bitcoin as digital gold, Novogratz underscores its role as a hedge against economic and political instability. The increasing populism and political fragmentation globally create an environment where Bitcoin can thrive. He points to historical moments like Brexit, which undermined confidence in globalization and fueled the rise of populist policies, as catalysts for Bitcoin's growth. He emphasizes that Bitcoin's value proposition lies in its decentralized nature and the trust it garners from a broad and diverse group of believers. This decentralized trust network is a powerful driver for Bitcoin's continued adoption and price appreciation.
If you take for a second the premise that Bitcoin is digital gold, and the growth of it is a function of adoption. It's a function of people having it explained to them and believing it. And so, by definition almost, Bitcoin is sold, not bought, right? You get orange pilled. And so I'm a sales guy at my core, even though I make more money trading. My mom was a salesperson, my brothers, my sisters were a family of salesmen. And so it was very natural for me, once I thought this makes sense, to sell. And, I said this recently on TV. I was like, Jamie Dimon was calling it a pet rock and Elizabeth Warren. I said, guys, the arrogance that's coming out of your mouth is shocking, right? Ray Dalio, Jeff Yaz, Abby Johnson, Paul Jones, Stan Druckenmiller, some of the best investors of the world, Pete Brigger, Mickey Milker, they all think there's value, but you're smarter than them. Yep, Elizabeth, you are so much smarter than all of the best investors in the world that like it. I was like, you don't have to like it, but don't be so arrogant to say it's not worth anything. Because that group of people saw worth in it. I saw worth in it early on because I thought this was an idea that would catch fire. It was an idea that would catch fire because Satoshi saw populism coming. The moment Brexit happened, it was the best thing for crypto. Populist governments spend too much money. That's why they're called populist. And we have a populist wave going around the world. We had a North Star before 15. It was called globalization. We believed in it. Collectively, rightfully or wrongfully, the world believed in globalization. And with Brexit, globalization fell apart. Now we're talking about resourcing and a war with China. None of that was there. And so we've created this political and economic environment for Bitcoin to thrive. Really, it's really scary for us as Americans. Now listen, if you're in this room, probably you will do fine because someone will tell you to buy gold, silver, copper, and equities, and you'll be in the right funds, and your asset prices will go up, as they are. Stocks go up every day. But most people in America don't own gold, silver, copper, equities, right? If you're 26 years old and you want to buy a house, just 12 years ago, the average house in America cost $190,000, and today it is $410,000. Like, think about what I just said. 12 years ago, you were starting as a 25-year-old at Anthony's shop. His salary's not double. You're probably paying 20% more. But the house is double or more than double, and the mortgage is a lot more expensive. And so both inflation and asset inflation really are like stomach punches to people that don't have assets.
Novogratz highlights the economic realities faced by younger generations, noting the stark increase in housing prices and the widening gap between asset owners and non-owners. He argues that Bitcoin and other digital assets offer a new avenue for wealth accumulation, especially for those priced out of traditional assets. The significant rise in housing costs over the past decade exemplifies the broader issue of asset inflation, which disproportionately affects those without significant capital. Bitcoin, with its deflationary characteristics and growing adoption, provides an alternative path for building wealth in an increasingly challenging economic landscape. Please like and subscribe my channel.